We had FOMC minutes yesterday. No surprise, growth was a topic. Today we had mostly spongy data outside of claims, but yet yields are moving up and the yield curve is steepening a bit. Your observations?
Yeah, I mean, I think that the real news from the minutes was the idea that the Fed's going to be ending its balance sheet runoff sooner. But you're right. It was interesting. The market didn't have near the reaction that you might have expected, at least on the bond side. It looks like that may have been priced in to some extent. I think stocks are happy that the Fed is not going to be engaged as much quantitative tightening as they might have feared.
Now, there's a story today that really captured my eye. S&P Global today said that global sovereign debt will top 50 trillion with a T this year, and they predict that we're going to be a little over 3% over last year, which equates to just under 8 trillion. 70% of that is to refi maturing debt. Weigh in on the debt issue.
Yeah, I mean, it's clearly a longer-run challenge for the global economy more generally, and obviously a number of industrialized economies, starting with the U.S., right? There's a notable increase in debt and deficits coming down the road. It's interesting that I don't think that is the thing that's really got markets kind of nervous yet, but it obviously is something that over the medium to longer term is going to have to be dealt with, and there's no obvious way that politicians right now have kind of figured out how to resolve that.
No, and it brings up two things to mind. First, you hit on, is that it is completely counterintuitive to the behavior in the Treasury complex in many global sovereign markets, and that is one issue. The other issue is that all debt isn't created equal. You know, we've had stimulus plans that really didn't give us much stimulus. Many countries do that. We could argue the current plan that everybody's nervous about, tax reform implemented last year, definitely increased the deficit, but really we have a spending problem, and that type of fiscal stimulus isn't all bad.
Yeah, I mean, it's interesting because I agree that you've certainly seen some positive impact on the U.S. economy from the changes in tax law, and there were some spending components to that as well. It doesn't look like at this point that there's an obvious longer-term benefit from that. We'll have to see how it plays out. I mean, that's really the key. I think there are aspects of tax reform we probably could have done that would have made that even better. But to your broader point, it's a little unusual that in a time that we are now in the U.S., some 8 or 9 years into an expansion, historically we've used it as an opportunity to try to get the fiscal house in order. And if anything, we're not really making progress on that. And globally, as you point out with the S&P report, we're not alone.